The company's vaccine does appear linked to increased chances of inflammatory heart condition known as myocarditis, particularly in young men. The company, though, maintains that the shot's benefits continue to outweigh the extremely rare risk of myocarditis. That's what he said in a call on Thursday.
Just taking a look at the share price just real quickly. It's down about 2.4% in today's session. The market value of the company has really taken a blow on the heart risk concerns, along with a forecast cut and some legal battles, one particularly with the government, or I should say a legal battle, with the government over patent rights. Shares of Moderna plummeting 34% this month through Wednesday's close. So as of yesterday's close, down another 2.3% today. So we're seeing pressure on this company.
What I find particularly fascinating about this story and about this company is that it's playing out differently in different countries. So in the Nordic countries, for example, particularly Sweden and Denmark, they've actually halted the use of Moderna shot in younger people. They're continuing to monitor the risk of inflammation. Germany has favored the vaccine from Pfizer and BioNTech over Moderna's in younger and pregnant people. Moderna has fallen behind those main rivals when it comes to clearances for booster shots and for use in children.
And then you think about what's going on here in the U.S. The U.S. Food and Drug Administration, FDA, has required additional time to assess Moderna's emergency request to approve that vaccine in adolescents aged 12 to 17 as it examines the rare risk of myocarditis. The regulatory review may not be completed until January. Meantime, the adolescent play has really been left to Pfizer BioNTech. And I hate to say it's about a race to get more vaccines out there, but that is part of it, right? I mean, these companies looking to get their vaccine to as many people as possible.
It certainly is, and we should note that even though we do talk about this a lot and investors are focusing on it, the numbers are still small. Compared with Pfizer BioNTech, Moderna has led to only 10 additional cases of myocarditis per 100,000.
Important. It's an important point to point out. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. It is a mixed Veterans Day trading session. The Dow lower, S&P, NASDAQ, they are both higher. Shares of the Walt Disney Company weighing on the Dow today. Right now, we've got Disney down 6.4%. The Dow down 130, a drop there of 0.4%. S&P up 9, up 0.2. NASDAQ up 115, up 0.7. NASDAQ 100 index up 0.5%. The Russell 2000 up now by 1%. Equities higher as investors recover from the previous day's sell-off on fears higher inflation could spur tighter monetary policy. Gold, spot gold up 0.7%, $18.62 the ounce. West Texas Intermediate crude up 0.2%, $81.52 a barrel. Tesla shares lower today, little change, down by about 0.3%. CEO Elon Musk has unloaded $5 billion of stock in the electric car maker shortly after fueling that social media debate over the tax treatment of billionaires' holdings. It is the first day of trading for Embark Technology. Shares of that company down now by 11.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, despite the fact that it does feel like, and I hesitate, Carol, to use the term feel because we like to go by data here. It feels like in certain parts of the country that COVID's getting better. Other parts, we're not seeing the best cases,
well, I think
specifically in the American West.
Well, hospitals in some parts of the U.S., you're right, starting to see the impact of an autumn wave of COVID-19 infections, the latest sign that the healthcare system is still facing serious pressure from the virus, even in places that have achieved relatively high vaccination rates. That is the world we live in.
It is. Well, let's get into it right now because we have a great guest with us. It's Dr. Joshua Sharfstein, Vice Dean for Public Health Practice and Community Engagement at Johns Hopkins Bloomberg School of Public Health. He joins us on the phone from Baltimore. The Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Sharfstein, help us understand what's happening in the American West, because what we see in those states is a relatively high portion of adults and even teens have been vaccinated. Why are we seeing an autumn wave of COVID-19 infections?
Well, you have to obviously disaggregate infections from hospitalizations and deaths. And first of all, thanks for having me. And second, here we are still talking about the pandemic so far into it. I think that we know that people who have been infected before can get infected again. People who've been vaccinated can get infections. Particularly if you've been vaccinated, those second infections tend to be mild, except for people who have special underlying conditions or are on the older side. So what you're seeing in parts of the country is much more transmission because the virus can cause these breakthrough infections. But where there are a lot of people vaccinated, you're really not seeing that translate into too many hospitalizations. Where we have hospitals that are overrun, they tend to be in areas with low vaccination rates, and the vast majority of people who are there are unvaccinated.
So here we are, 18, 19, 20 months in? I'm kind of losing track. I realized, Dr. Sharfstein, the other day when there's a colleague of us who was pregnant before the pandemic, was home, stayed home, had her child, and the baby's now 2 years old, that I realized how long this has been going on. We all talk about living and learning from terrible things like the pandemic. And I do think about healthcare more broadly and public health. Are we going to come out of this smarter and in a better way?
That is such an important question to be asking right now. And, I think sometimes people are overly optimistic about that because they think, we're going to learn the lessons from this, right? So we're not going to have it again. But if you look back in history, it's actually kind of the rare crisis that leads to real change, and often it's because people are really working to make that happen. And you're really having to fight against what I would call a tremendous pressure to just get back to normal, pretend it never happened, and keep moving forward. And you can feel that in your own life. You just flip a switch and go back to 2019. A lot of people would flip that switch. But, doing that would paper over a lot of terrible things that happened and a lot of vulnerabilities we have. So we have to kind of fight that and get to a point where we're ready to make major changes.
How do we do that, though? Because I hear what you're saying, but I also think at the same time that everything in this country is politicized, and even vaccines have become politicized. So how do we come out of this stronger?
it's hard because in the past where you've had a problem, say, there was a scare that women might have been taking a drug that caused severe birth defects. And the whole country understood what went wrong. There was a near miss in the United States. This is the 1960s, and thousands of babies were affected in Europe. And, everybody understood what went wrong, and the country came together and supported a very strong law that really established medication regulation in the United States and made sure that there wouldn't be a problem like that again. But in a case like that, there was a story that people could generally understand and a clear solution on what to do. And unfortunately, the politicization that you're talking about, that's what makes it harder to do both of those. It's harder to have a story that everyone can get behind, and then it's harder to figure out what to do. I did take a little bit of hope in the fact that there's now a bipartisan proposal for a COVID commission, and hopefully that could be set up in a way that even if you don't get everyone, you get a lot of, fair-minded people looking at this and saying, maybe we don't want to have a situation where 750,000 Americans die again. And you start to look at some of the questions and, the structural questions. You don't have to pick over, I think, some of the maybe political failings, but the structural questions, the weak public health system, the underinvestment in community health, the vulnerabilities that different communities may have, to really look at those things and get some consensus around it.
Dr. Sharfstein, just got about 30 or 40 seconds here. I think about as the president goes around the country and talking about his infrastructure bill, community health care, is there enough in there? Is there stuff in there that will make a difference, or we're not even scratching the surface? And again, just got about 30 seconds here.
Sure, it's probably the other legislation that they're hoping to pass that would have more for community health.
And that's what I mean, the softer,
Yeah, I like it's really the
or social services.
The additional bill, yeah. But I would say this, your concept of infrastructure is the right concept. People came together eventually on infrastructure because they know that the bridges are falling down. They see the big traffic jams. They know the roads are falling apart. And they know that this is necessary for the future. It's the same for public health. Like, we had the metaphorical bridges falling down and people couldn't get testing or contact tracing. We need that investment in public health infrastructure to be better next time.
Well, really some thoughtful things for us on this Thursday. Thank you so much. Dr. Joshua Sharfstein, he's Vice Dean for Public Health Practice and Community Engagement at Johns Hopkins Bloomberg School of Public Health, joining us on the phone from Baltimore. Coming up, we're going to talk about our most read story on the Bloomberg on this Thursday. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I'm just going to pull up red on the Bloomberg terminal. Yeah, still number one in the past 8 hours.
Yeah, it's been there. It's been at the top spot for hours. I sent it to a colleague, and that's where I found it.
Did that colleague not have time to date, and that's why he's looking or she is looking for a new job on Wall Street?
No, I was just wanted to say, I mean, it was honestly, it was because Brian Chapeta was talking about it too when I saw him earlier in the day. Everybody's talking about this story. It's by Hannah Levitt. It's about job hopping on Wall Street. It's been speeding up with 8-figure packages. We're going to talk to her in just a minute. She's going to take us through what's going on and why people who aren't job hopping are also feeling like they're being left behind.
All right, we're going to get to that in just a moment. First up, though, let's get back to your top business stories and check on that trading day. Hey, Charlie Pellet.
Well, hello there, and here's what's going on. Veterans Day, we're looking at a mixed market here. Certainly shares of the Walt Disney Company weighing on the Dow Jones Industrial Average. Disney right now down 6.9% right now. The Dow down 139, down 0.4. Everything else higher, with the S&P up 8 right now, up 0.2%. All the indexes higher, I should say. NASDAQ up 118, up by 0.8%. NASDAQ 100 index up 0.5. Russell 2000 up 1%. Dow Transport's pushing higher now by just about 0.8%. Equities higher as investors recover from yesterday's sell-off on fears higher inflation could spur tighter monetary policy. Bond market closed today for Veterans Day. Spot gold up 0.7%, $18.62 the ounce, and West Texas Intermediate crude, we'll call that flat, up 1 cent now, 81.36 a barrel. Roche Holding and Regeneron's Pharmaceuticals antibody cocktail is being recommended by the European Medicines Agency for authorization as a treatment for COVID-19. Here in the U.S., hospitals are already starting to see the impact of an autumn wave of COVID-19 infections. The latest sign that the healthcare system still faces serious pressure from the virus, even in places that have achieved relatively high vaccination rates. Intensive care beds occupied by 1%. Recapping, stocks trading mixed. S&P up 8 right now, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet with that Bloomberg Business News Flash. Well, it is our most read story on the Bloomberg today. All the job hopping going on Wall Street. Turns out for some, they're fed up with working so much they can't even date and some other things. So they quit and they get a pay bump in the process.
It's the top read story on the Bloomberg terminal over the last 8 hours. Hannah Levitt wrote it. She's finance reporter for Bloomberg News. She joins us on the phone from New York City. This is really hard data to come by, Hannah. So how can you quantify the way that people are moving and where they're moving?
Yeah, so that's a really good question, and that's something that we grappled with as we were working on the story. And really, anecdotally, what we're hearing is that this is happening everywhere. Everyone is having to deal with, people leaving in greater numbers than, forget 2020, because 2020 people weren't leaving their jobs. It was, the onset of a pandemic. But looking at 2019, turnover is up compared to 2019. So people are leaving more than usual. And it's due to, this confluence of factors that we go through in the story. But yeah, so it's really, anecdotally hearing from sources, hearing executives talk on calls, things like that.
Well, and one of the things that companies hate is turnover, right? It costs them money. It's a loss of productivity, but it also costs money to recruit and bring in new workers and train them and so on and so forth. And that's one of the big problems that the banks are facing at this point.
Mm-hmm. And that's where this bidding war thread is really interesting, right? Where it just, the price keeps going up. And we even saw that a bit with the junior bankers. Obviously they're not getting paid 8 figures, but we saw a bunch of pay bumps across the industry for junior bankers after, that they were overworked and making that known earlier this year.
So wait, I got to ask you, because I've been teasing the heck out of it. That's the idea that, all right, they're so tired of working so much they can't even date. But there is something going on, Hannah, and I think it's true in the financial industry, and I think it's kind of even more broadly across our world coming off the pandemic, that people are tired. People are thinking about balance. They're thinking about choices, and we're seeing that play out in Wall Street as well.
Yeah, absolutely. So there's, the existential points that you bring up. And also, if you think about Wall Street in the past, really almost 2 years at this point, it's been crazy in the markets, crazy in deal making. So these really core Wall Street businesses have been really, really busy. So now you have these people who are, perhaps the busiest they've ever been, and they're doing it through a pandemic. So they're either doing it, from home, or they're having to go into the office during a pandemic. And, it's been a lot of months.
What can you tell us about lifestyle shifts and what people are looking for in the way that the big banks are actually changing the way they do business to attract and retain talent? I mean, we've talked about Jane Fraser and Citi, but does that happen?
And it's no longer just about, you can wear khakis on Friday.
Yeah, we're talking like
bigger
competing
demands
with companies that don't even require you to come into the office.
Right.
Yeah, exactly. Well, and that's the really interesting thing when you look at, some of the firms. We talk about JP Morgan a bit in today's story, and they were among the more aggressive firms in terms of bringing employees back to the office. And then you look at someone like Jane Fraser, who has taken a more flexible approach, and that functions as a recruiting tactic. And you can see some of the same things with these fintech companies who are, keen for financial services talent and offering that more, I guess, fintech or tech lifestyle.
Hey, Hannah, as you and Tim pointed out, the numbers are hard to come by. But having said that, like JP Morgan being more aggressive in requiring employees to get back to the office, Jane Fraser over at Citi being a lot more flexible, has that played to their advantage? Has JP Morgan, been hurt more as a result of them saying, hey, we want you back in the office, and just got about 30 seconds?
Yeah, so one thing that I heard in my reporting was that, the jury's still out a little bit on the flexibility aspect, bank to bank, going forward, looking at 3 years from now. So then you look at offers of higher pay, and that adds more certainty, looking, a couple of years ahead than what the return to office or not might look like, given everything we've seen over the past 2 years.
It's interesting.
Good time to be looking for a job.
Yeah, especially on Wall Street.
Yeah.
Right? Exactly, because you're definitely seeing some competition, big time, in paying up for it.
I wonder also what it means for people looking for raises and compensation adjustments this year.
I guess we'll find out by the end of the year,
yeah.
Right? We'll get a good feel on that. All right, Hannah Levitt, thank you so much. Bloomberg News finance reporter Hannah Levitt. Check out her story. It is the #1 most read story on the Bloomberg on this Friday's Eve. You're listening to Bloomberg.
Let's get a check of world and national news. Nancy Lyons is in D.C. Hey, Nance.
Thanks, Tim. A flyover the tomb of the unknown soldiers among the tributes today to the nation's military veterans. President Biden was on hand at Arlington National Cemetery to lay a wreath at the tomb and to offer a message of appreciation.
Today, we pay homage to the unrelenting bravery and dedication that distinguishes all those who have earned the title of American veteran.
Biden says there's nothing low risk or low cost about war for the men and women who fight it. His administration is establishing a new model for how they assess the health effects that U.S. veterans have been exposed to with toxic burn pits during their service overseas. Those pits are used to burn waste, sometimes toxic. Federal officials plan to start by examining lung and breathing problems, but they say they will expand the effort as science identifies potential new connections. Well, President Biden is expected to hold a virtual meeting with Chinese President Xi Jinping next week, and the former U.S. ambassador to China, Max Baucus, tells Bloomberg there is room for improvement in their relationship.
We have to deal with China. We may not like it. We may not like it as being more repressive. We may not like it as being more closed, but it's not going anywhere. We have to deal with it. And I think that the more that President Biden can convey that message to President Xi, that is, we know you're there. We know we got to deal with you. Well, here are our issues. So that they're talking more like adults.
Max Baucus spoke with Bloomberg's David Weston on Bloomberg's Balance of Power. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Master, Tim Stenovic here in Bloomberg headquarters in New York City, our interactive broker studio. Drones going to be making deliveries in Salt Lake City.
It's not Amazon doing it.
No.
Years and years ago, they said they would.
Yeah, this is a California drone startup, Zipline. They are planning to begin delivering medicine, blood, and other supplies to homes in Salt Lake City, Utah. They're looking to do their first deliveries in the spring of 2022 reach hundreds per day within 4 years of launching the service.
The company, you might be familiar with it because it's really been focused on rural parts of Africa, including clinics in Rwanda and Ghana. They've been doing that since 2016. But now they've signed a service agreement with the Utah-based Intermountain Healthcare to make deliveries to its patients in the city, so a less rural area. I mean, Salt Lake City is not rural.
No, but there's a lot more space.
Yes, there
right?
is.
Like
It's
having
not-
right?
Yeah.
It's not like Manhattan
No.
or Chicago or, pick your kind of very congested
Exactly.
city area. And apparently they're going to target yards and driveways for the drops. I'm just thinking about, I'm trying to picture the visual. What?
Make way for blood, like a blood bag dropping.
It's going to be interesting. I can't wait to see some of the video. It's going to need still approval from the Federal Aviation Administration before it can begin. But keep in mind, since this company was founded back in 2014, it has flown over 15 million miles, made more than 215,000 deliveries, including millions of COVID vaccine doses in Africa. And its drones launch from catapults and can fly up to 100 miles round trip, serving up to 8,000 square miles from a single hub.
Yeah, it's pretty cool stuff. Intermountain, by the way, it's a non-for-profit organization. It was founded on a gift from the Church of Jesus Christ of Latter-day Saints back in 1975. It operates 24 hospitals and 215 medical clinics in a few different states, including Utah, Idaho, and Nevada. It serves roughly half of Salt Lake City's population, which is more than 1.2 million.
And as for drones, drone operators backed by Alphabet, Amazon, and UPS have already been certified by the FAA as unmanned air carriers. So it's coming, folks.
Look out above. Look out below.
Yeah, watch out.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are rebounding. Consumer prices remaining in focus. Disney and Beyond Meat falling after earnings. Right now, Disney weighing on the Dow. Disney down 6.8%. Beyond Meat tumbling by 13.3%. S&P higher by 8, up 0.2%. The Dow down 130, down 0.4. NASDAQ up 116, up 0.8%. No bond market trading today for the Veterans Day holiday. We have got spot gold up 0.7%, 18.62 the ounce. West Texas Intermediate crude up 0.2%, 81.48 for a barrel of WTI. First day of trading for Embark Technology. It is a self-driving truck company out of San Francisco. Embark shares, they're tumbling by 11.7%. Day two of Rivian. Rivian is moving higher again today. Rivian up now by 17.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the Bloomberg New Economy Forum, it's back in full force this year after going fully virtual last year. It's all about leaders from across the globe in person. Joel, are you okay over there? Joel's got a little chair.
You got the little, they gave you the little chair today, Joel?
It's like pre-Thanksgiving. I'll be over here at
the kids' table?
With the chicken nuggets.
Joel's at the kids' table.
Yeah. Sorry, I couldn't ignore it. Anyway, with us is Bloomberg Business Week editor Joel Weber, along with Bloomberg Business Week economics editor Christian Lindblad, to talk about not a tiny event, a big event called the New Economy Forum that's happening in Singapore next week. And the magazine is really teeing it up. It's the cover of the issue. Should we begin with Tiny Joel?
Well, you heard my falsetto there, but really this issue is about as you said, this setup for the New Economy Forum, which is in Singapore. And the thing that's always stuck to me is this dialogue that kind of happens between developing and developed, and what lessons can there be shared to solve problems, common problems. And
big problems
as
too, right?
Christina wrote in the intro, like the biggest problems in the world know no boundaries, right? And I think the virus really showed that. It was this heat-seeking missile for all the weak points in society, and here we are trying to wrestle with it going on, 2 years later. Christina, when you were thinking about all the stories that you wanted to have in the mix in this issue, what were the ones how did you approach that?
I always look for this sort of, I want to have this push against not invented here mentalities. So I'm always like, what can sometimes small countries teach big countries? What can we teach each other is really what drives me when I think about what kind of stories we want to have in there.
Well, to that end, Togo was one that I had no idea that this program, Togo being a small West African country, I had no idea that they had this stimulus program. How did they do it, and how did it compare to the U.S. efforts?
Well, they did it completely on the fly. This is a country that really doesn't have tax records. Most people are too poor to pay taxes. So they wanted to use mobile money. That they knew how to do. Africa already is big acceptance. But then they thought, what database do we use? What information's out there? So they just repurposed voter rolls because they have information about occupations with that. And in 2 weeks, they built a platform and started out sending these payments. And like the World Bank and NGOs took notice and said, this is really working well. Let us help you fund the next round of stimulus. And some countries are now looking at potentially doing advance payments. For example, if you know that there's going to be floods coming into a particular area, you can send advance payments to incentivize people to move out, to basically give them the wherewithal to take, their goods, their cattle, their families, and move them out of an area.
You almost feel like federal government. Are you listening? Like you think about, right, the efficiency with which money got into the hands of people who needed it in the developing world. We talk about that all the time with fintech, right? That we're learning so much by what the developing world is doing.
Right. In a way, the U.S. and some European countries are stuck in a previous time, using old pipes to distribute money.
Speaking of sort of old pipes, and we go to rural India, where I'm pretty sure they don't even have pipes, but there is this effort to try and get vaccines, obviously, to the farthest reaches of countries. India being a particularly interesting example of this, because we've seen what can happen when mutations of the virus happen. Because of the number of people in the country and the number of people who aren't vaccinated, there has been some thought in the story that goes into this that, boy, if we have large swaths of populations that don't have vaccines, then that could be where another mutation comes from. So what resistance have those efforts met in rural India?
Well, there were some villages that actually don't come into contact with outsiders very often. So the idea that people are going to just show up with, coolers full of shots wasn't going to work. Some of the places in the area that we looked at, there's also this group called Naxalite, this Maoist rebel group that attacks health workers sometimes. So we looked at all these obstacles, but they were so creative in how to get around some of these things, and also enlisting local leaders and religious leaders, doing street theater to sort of try to chip away at misconceptions and vaccine resistance, and having success. It's just taking a while, but I think that actually India really has began ramping up its vaccination coverage.
Okay, and the other thing that you can do when you think about rural areas is use satellites, and that's what today's story is about. How is that that effort, which actually connects back to Google and sort of some of the satellite imaging they've had access to? What's going on there?
Well, that was a company taking basically all this data that had been sitting around in NASA repositories and other agencies that have satellite imagery and saying, okay, how do we make this accessible to people? Putting it on the cloud is one thing, but most people don't have the tools to wrangle these gigantic data sets and draw insights from them. So basically, for several years now, they've been doing this pro bono work with NGOs, government agencies, helping them kind of glean information that they need to further their goals. So, for example, in Africa, they're helping nomadic herders find watering holes for their cattle.
Yeah.
They look at the information on satellites and relay it out by radio. And then in the U.S., in western states, they're starting to use this information to manage water resources. For example, they're looking at transpiration rates from fields.
Explain what that is, transpiration.
That means that the amount of water that's evaporating from a field.
Because it's inefficient if the water evaporates. It's not actually
if you see very
watering the
different
plants.
rates, like from one field to another, it could tell you that somebody's overwatering, or it could tell you also about the crops. But so it's not just developing world, it's also developed world. It's being able to sort of create a tool that can be used for different purposes.
We're going to do a little bit of a deeper dive into it. We've got Leslie Kaufman. We're going to talk a little bit more about it.
She knows a lot.
It's really cool. And the individual behind it. Can we go to Life on Mars? Can we go there?
You wanted to go there?
I don't know.
So it'll take 6 months, Carol.
The carbon dioxide problem, I think we got to deal with first.
And you might not be able to get back. That's the problem.
But I can lift big things easily.
There you go.
And that's actually, the thing that stuck out to me about the story that was so cool, I hadn't thought about, is the amount of excitement among architects and builders and about this idea of, like, if we were to do something in Mars, what kind of potential could there be? And the fact that the atmosphere is different allows you to actually lift things that you wouldn't be able to lift here and build in a way that you wouldn't be able to build here. So it is sort of like playing with a multi-dimensional object in space on a different planet that, as long as we're thinking about problems and, if we really screwed this planet up, let's find out how to do something else somewhere else.
Some would say yes.
Yeah.
But that carbon dioxide problem, we got to
it's on the list of things to figure out still.
Okay, but if we can't figure out water here on Earth, how are we going to figure out water
it's
Mars?
underwater. It's underground there.
Come on.
We got to figure out how to drill it. But
Elon Musk can bore a hole through
All right,
it.
I'll
We'll
see you
get
guys
that
there.
water.
Yeah. Musk has it all figured out.
He does. Anyway, great issue, Bloomberg New Economy. Check out the stories in the magazine. Of course, check out the event, which you can get on streaming. Just check it out. All right, Christina Lindblad, thank you so much. Economics editor of the magazine, Joel Weber, editor of Business Week.
news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Veterans Day, Thursday, November 11th. We salute our veterans. We've got the Dow lower, the S&P, NASDAQ, both advancing right now. The Dow down 134. Shares of the Walt Disney Company weighing on the Dow. The Dow down 0.4%. S&P up 6, up 0.1%. NASDAQ pushing higher by 98 points, up now by 0.6%. Equities are advancing as investors recover from the previous day's sell-off on fears higher inflation could spur tighter monetary policy. As for the Fed, Dr. Julia Coronado is president and founder of Macro Policy Perspectives.
We do think they will lift off in 2022, but we don't think it'll be till towards the end. We've got to taper we are putting in a lot of global removal of accommodation, and we haven't yet seen its impact on markets or the economy.
Again, the Walt Disney Company lower now by 7% after earnings. Beyond Meat plunging now by 14%. First day of trading for Embark Technology. It is a self-driving truck company out of San Francisco. Its founder and CEO, Alex Rodriguez, is one of the youngest people ever to run a multi-billion-dollar listed company. He is age 26. Embark today lower by 11.7%, but Rivian Automotive shares, they went public yesterday, surging again today, up another 20% to 121.31 on Rivian. So again, the S&P 500 index being led higher by gains in materials, energy, and technology after falling 0.8%. Tesla struggling for direction after filings showed CEO Elon Musk unloaded $5 billion of stock. Tesla shares down now by 0.2%. Recapping, S&P up 6 now, up 0.1%. Gold up 0.7, 18.62 the ounce. West Texas Intermediate crude down 0.2. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, you are listening to Bloomberg Business Week, Friday's Eve, as we like to call it around here, with the Business Week team, or just because, I don't know, it makes me think about Friday.
Friend, I got news for you. We're not there.
No, we're not. And we're watching some churn in the markets, although I kind of got schooled a little bit by Dave Wilson. I'm okay if I get schooled by Dave Wilson, saying that even though I feel like there's a bit of volatility in the markets, it's been a tight range that we've been trading with.
Yeah, he made a really good point. Still, it does make me look at the WEI function on the Bloomberg terminal, and we do see that Dow is underperforming the other major indices we follow, and that's thanks to Disney's miss yesterday.
Happiest place on earth. Apparently not today.
No.
But it was all about streaming, and even though Bob Chapek, the CEO of Disney, warned back at a Goldman conference back in September and said, listen, streaming, the growth isn't going to be there like we've seen. There was still some disappointment because it was even below, I think, street estimates.
Investors wanted to see 119 million customers. They missed that by about 1 million.
Yeah.
Chapek still says they're 260 million by 2024.
All right, so that's the goal a few years out. All right, let's get to a story we just chatted about briefly with Business Week editor Joel Weber and economics editor Christina Lindblad, which is the cover this week, in-depth dive into the Bloomberg New Economy Forum, which is coming up next week in Singapore, an event bringing back together global leaders, really tackling the biggest issues of our time. Part of that coverage is a story that we talked about with them, and it happens to be the Bloomberg Big Take today, Tim. It's among our most read on the Bloomberg.
Yeah, it's all about Google turning satellite imaging into a key tool for climate change. It's written by Leslie Kaufman, senior correspondent at Bloomberg Green. She joins us on the phone from New Jersey. Leslie, before reading your story, I had never heard of this Google's Earth Engine. What is it?
First of all, so nice to be here with both of you.
Thank you.
Google Earth Engine is a sort of obscure arm of Google. You're not the only people that's never heard of it, but it's become increasingly imperative for the climate community. Google Earth Engine takes petabytes of satellite data, and we can talk about how much that is. But
did you say petabyte?
Petabyte, yes. It's lots and lots of data. And it uploads all this satellite data, and it makes it accessible to all sorts of NGOs and environmental groups. And this gives us real-time information on things that are happening on our planet, like deforestation and flooding.
All right. Terabyte. Did you say terabyte?
Terabyte.
Terabyte. Okay, okay. Sorry.
Terabyte. Yes.
I'm on Google.
You haven't even heard of it.
I was just going to say the internet has just crashed because everybody's been looking up terabyte. No, it's really fascinating, and they've been really working with NGOs to really take a look at climate and farming and different things, and really figure out maybe better ways to do things. Leslie.
Yeah. So one of the extraordinary things is we have almost 30 years or more of satellite data. These are satellites that have been circling the Earth from NASA and the European Union. And they've gathered an incredible amount of information. They can tell you composition of the soil down to 18 inches, for example. And they can give you real-time information on when of trees are disappearing in a forest. The question was how to get all this information into a usable form. And that's what Google Earth Engine does. It takes all that information, which was stored on magnetic tapes in a vault in South Dakota. Mm-hmm. It uploads it to the cloud. It creates programs. And now if you're an activist in Peru and you want to make sure the rainforest is not being cut, they'll give you real-time alerts on your forest being cut down.
How do they communicate that data to people who might not have the technology in parts of sub-Saharan Africa or parts of the world that need monitoring? Like, how does this become actionable data?
So we talk a little bit about this in the story, but basically Google itself partners with any number of groups, NGOs, governments, city agencies, and they create a system in which you can communicate it back down. So if for one of the examples we have is how goat herders in the Furlough region of Senegal have harder times finding water because of climate change. Well, a partnership with Google's and Veterinarians Beyond Borders now looks in real time as to where the water is, and it sends it out by radio to the herders. They never even have to come in. All they get is that little piece of information they need. They don't need to know everything else, but they get the piece of information they need by radio.
You know, when we think about the use of data, and I guess as we all try to understand, we know that there's a lot of data out there, Leslie, but as we think about how it can really be put to use for good, I feel like this is a great illustration of it. And especially when it comes to climate or food and farming, like we could really figure out how to make a difference in a better way.
I think that is the hope. Certainly the environmental community believes this. I talked to one activist who has been key in stopping the deforestation of the Amazon, or slowing it, I should say, because we haven't in any way stopped it, but who's been monitoring it. And he says for their group, they consider it before and after Google Earth. Google Earth has become so important to this community that they actually fear they will take the service away. Currently, at least for a lot of the nonprofits, it is a pro bono service. That is, they do it for free. But Google has also just launched a for-pay version of Earth Engine, and there's a great deal of anxiety within the environmental NGO community that Google might take away this service, which is free and has become so valuable.
I was just going to ask about that. Google's business, of course, relies on advertising. Is there any way, Leslie, that they're using this data for advertising, just in the 30 seconds we have left with you?
Not so much advertising, but they are definitely selling it to corporations. You know, Unilever's using it supposedly to keep its deforestation its supply chain free of deforestation. So they do have paying clients now. Insurance companies will use it. Other groups will use it like that.
And it sounds like the individual who runs this team for Google, Rebecca Moore, sounds like a fascinating person as well. We'll have to try and maybe get her on air because I'd love to find out more about what they're doing. Incredible story. Leslie, so grateful that you could spend some time with us. Leslie Kaufman, she's senior correspondent over at Bloomberg Green. Check out the New Economy Forum and check out the New Economy Forum coverage. It's in the current issue of Bloomberg Business Week magazine.
Well, let's head now to Washington, D.C. for Check the Latest World and National News. Nancy Lyons is in the 99.1 newsroom in D.C. Hey, Nance.
Well, Tim, sticking on the issue of the climate, the COP26 Climate Summit is winding down, with nations possibly meeting again next year. UN Secretary General Antonio Guterres says they must continue striving to keep temperatures from rising.
1.5 degrees is still on reach, but in life support.
Gutierrez is referencing 1.5 degrees Celsius or 2.7 degrees Fahrenheit. One key concern has been for rich countries to provide the cash to help poorer countries adjust to new and cleaner technologies. People may have been driving less last year, but traffic fatalities jumped, and Bloomberg's Amy Morris says that's raising concerns among safety advocates.
The federal government estimates that more than 20,000 people died in motor vehicle crashes in the first half of this year. That's an 18.4% increase from the same period in 2020. Initially, safety experts blamed the rising deaths on reckless drivers speeding down empty roads, but experts say the numbers are still going up. In Washington, I'm Amy Morris, Bloomberg Radio.
Moderna claims the protection its COVID-19 vaccine provides outweighs the risk of a rare heart condition. The company says the vaccine protects against severe disease, hospitalization, and death as a result of coronavirus, which it says trumps the risk of myocarditis. The rare heart inflammation has been reported among a small number of young men who have received the Moderna shot. The FDA is considering whether to authorize the vaccine for children ages 12 to 17. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So we mentioned the most read story on the Bloomberg is job hopping on Wall Street, speeding up with 8-figure packages. The third most read story on the Bloomberg terminal has to do with a conversation our surveillance team had with billionaire investor Leon Cooperman.
Yeah, he said he doesn't consider someone who earns $400,000 a year rich after that figure was proposed by President Joe Biden and House Democrats in plans to raise taxes on wealthy households. Here's what he said. Quote, I believe rich people should pay more in taxes. The question we have to deal with as a nation is coalesced around one question. What should the minimum tax rate be on wealthy people?
Yeah, he called talk of wealthy taxes, quote, baloney.
Of wealth taxes, yeah.
Yeah, wealth taxes specifically. Thank you. He said, we don't need new forms of taxation. Let's deal with the loopholes, he said, pointing to rules including those governing carried interest, which allows some private equity managers and venture capitalists to pay lower rates on one of their main forms of compensation. I've had individuals just kind of out and about conversations saying, yeah, it's not about a wealth tax. That's not what we need. We need to just cover up the loopholes, fix taxes and all the loopholes that are out there.
What do you think about this $400,000 number?
I think if you live in New York, it doesn't feel like you're wealthy.
Yeah.
I hate to be, I've often thought that you kind of need to look at where people are living, because I think the cost of living, if you're in the New York metro area, if you're outside LA, if you're outside Chicago, like these are expensive places to live.
They certainly are.
It's your choice, and you make more money, but still.
Yeah, we talk a lot about real estate and the way that real estate in New York City has come back. But if you look at those numbers, the cost of living is high in these metropolitan areas. So I think that, yes, in some parts of the country, you can live a lot better off of that kind of money. And to some people in other parts of the country might hear that from President Biden and say, wait a second, I don't feel like I have more money to be taxed more.
The thing is, $400,000, you probably own a house, you have a mortgage, you can tax deduct some of that, right? For many Americans, they don't own a house, so they don't get to tap into a tax deduction like that. So I think it's definitely very complicated, and I think there are regional differences, but how do you really accommodate that? I just don't know. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pelota. Mixed of Veterans Day Thursday, the Dow lower, Disney weighing on the Dow, S&P, NASDAQ, they are both higher. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Like you said, U.S. stocks trading mixed today with the Dow currently down 153 points. S&Ps are higher by 4. NASDAQ climbs by 85. The bond market was closed. Gold trading higher by 12. Oil is little changed. And among the main 11 S&P sectors, leaders were materials, tech, and the financials, while utilities were under pressure. Leaders to the upside in the Dow, Walgreens, Dow Inc., and Salesforce. And you mentioned Disney. It fell 6.9% after earnings and led to the downside. Also after earnings, Bumble fell 20%, Sophie rose 15%, and Affirm Holdings jumped 17%. In deal news, General Mills is set to weigh a sale of its Progresso and Helper brands. And in other news, Rivian rose 20% on its second day of trade. Wrapping things up, Lordstown Motors and Luminar report after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic here in our Interactive Broker studio. So one of the big stories of the week, Tesla, Elon's Twitter poll last weekend, should I sell, should I not? Then Musk selling some $5 billion worth of stock to deal with tax obligations by exercising some options. I have to say, it's all just been interesting, and I do wonder how this all has gone down from a regulatory oversight perspective.
Yeah, it's a question that you and I were talking about in our planning call earlier today, and we were able to get Jesse Westbrook, financial regulation reporter for Bloomberg News. He joins us now from the Washington, D.C. Bureau for Bloomberg News. So Jesse, what do we have to understand from a regulatory perspective about what Elon Musk did on Twitter versus what he did when it comes to the way that executives do sell shares of a company?
Well, the first thing I would note about Elon Musk is he is a complete unique circumstance because of a prior settlement with the Securities and Exchange Commission where he has to get a lawyer within Tesla to review his tweets that may be material to investors. He doesn't have to get every tweet reviewed, but those that might move the shares, those that would be relevant to Tesla shareholders, he has to get those reviewed. So I would just start with the premise, I hope he got this tweet reviewed because no doubt in my mind that it was market moving, and we certainly saw it was market moving once the stock market opened on Monday when Tesla shares sold off pretty substantially. So that's the first thing that the SEC, I mean, look, it's not clear to me that he did anything wrong here, particularly when people start getting in discussions of, insider trading and that sort of thing. But it's hard to believe the microscope that he's been under from securities regulators that the SEC didn't at a minimum reach out and ask, hey, did you get this tweet reviewed?
Well, and what's interesting, too, is that he's been telegraphing a potential stock sale because of taxes for months, right? So this stuff's been floating out there. I don't know if that helps or hurts. I don't even know if that's the right thing to ask, but maybe helps his case that, I've been talking about this.
Well, that's a question. We had that interesting story the other day about his brother setting up a share sale before the tweet was sent. And that I got a lot of messages in my inbox. Well, isn't this crooked? Isn't didn't the brother know? Isn't this insider trading? And then you're making a point that kind of cuts back at that theory just on the fact that he has been out there sort of telegraphing that he's going to sell stock. So is a poll, any different than sort of hinting? And and who knows? Maybe the poll would have found that shareholders didn't want him to sell. So I think it would be a pretty tough argument for the SEC to say that what his brother engaged in was a form of insider trading. And for all we know, the brother didn't even know that Elon Musk was going to send that tweet on Saturday.
So from a regulatory perspective, how do executives who are not Elon Musk, if we just think about the way that executives sell shares and when they have to say they're going to sell shares and when that becomes public, for all intents and purposes, was that adhered to?
Well, I mean, the rules are very loose and fast in regards to executive share sales. A lot of executives, best practice is thought to create a prearranged share sale plan where you periodically unload shares on set dates, certain amount, every 3 months or whatever it might be, and that's thought to insulate executives from insider trading allegations. The problem with that is, we found all sorts of issues with these plans. They can be canceled at any time. Disclosure about when they're canceled is sometimes an issue. Now, one thing I would say about Elon Musk that sort of raised my eyebrows today was the fact that, he did this poll on Saturday indicating, look, tell me what to do. If you say sell the shares, I'll sell the shares. But then we find out that he actually had set up some of these share sales in September.
Right.
That made me that raised a question in my mind about, well, is he being truly genuine and honest with shareholders about his intention? I mean, the SEC, as much as they're concerned about insider trading, they're very concerned about senior executives misleading their investors. So, that did raise my eyebrows a little bit.
Yeah, exactly, right? If he was planning to do it anyway and kind of had laid it out there. The other thing that kind of seems a little bit interesting too in all of this is who is actually kind of, as I think Dana Hall and Ben Bain wrote, Twitter sitting Elon Musk, right? Because it's changed because those people kind of come and go at Tesla.
Yeah, I mean, I think one of the reporters might have even gotten a bounce back email when they were trying to identify the Twitter sitter. Look, who knows? I mean, I hope the SEC knows, and I hope Tesla's general counsel knows. Who the person is, I guess, is less important than that, he's actually fulfilling the obligations of his settlement with the SEC.
And if it doesn't, what happens?
Well, that's a good question too, because the SEC and Tesla have argued over that. There's been a couple of episodes where the SEC has pretty overtly said, we don't think you're adhering to the terms of the settlement of having the so-called Twitter sitter monitor market-moving emails, and Tesla has argued back. Well, in some cases they said, well, we don't think that particular tweet was market-moving. We think we're totally in correspondence with the settlement. That's the problem with all of this sort of stuff. You think it's settled, and then it just becomes a he said, she said kind of affair.
So the disruptor continues to disrupt is basically it. Jesse, this is so great to have checked in with you. Thank you so much. Jesse Westbrook, financial regulation reporter at Bloomberg News from our Washington, D.C. bureau. It's kind of what we wanted to know, right?
It's exactly what we wanted to know.
Like, what's the regulatory part of this? You are listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Yes.
Third Eye Blind, not Matchbox 20.
That was a GIF yesterday. I don't know if you're going to get a GIF today.
That was just a terrible situation. Rob Thomas was angry with me.
I bet. Dave Wilson is nodding big time. Hey, Dave's coming up. He's got his chart of the day and his song of the day, so we'll get to him in just a moment.
In the meantime, check the latest when it comes to the trading day. Here's Charlie Pellet.
Hi, thank you very much, Tim. Here's what's going on. 28 minutes to go before that closing bell clangs on Wall Street with the S&P up 5 right now, up 0.1%. The Dow on the minus side, down 129 right now, down 0.4%. Disney weighing on the Dow after earnings. Shares of the Walt Disney Company plunging 6.7%. Also after earnings, by the way, Beyond Meat down now by 13.8%. Equities, for the most part, though, higher as investors recover from yesterday's sell-off on fears higher inflation could spur tighter monetary policy. S&P up 5, up 0.1%. NASDAQ up 88, up 0.6. Bond market closed for the Veterans Day holiday. We've got spot gold up 0.7%, 18.62 the ounce. Bitcoin up 1.2%, 65,061 on Bitcoin right now. West Texas Intermediate crude, little change, down 3 cents, 81.31 a barrel. So again, recapping a mixed Thursday with the S&P up now by 5 points. Hospitals in some parts of the U.S. are already starting to see the impact of an autumn wave of COVID-19 infections, the latest sign that the healthcare system still faces serious pressure from the virus, even in places that have achieved relatively high vaccination rates. Intensive care beds occupied by COVID-19 patients are climbing in 12 states from 2 weeks earlier. Dr. Chris Byrer is a professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, he told us the key is getting more people vaccinated.
We really need to now address the vaccine hesitancy and the folks who are, still unwilling. I think that's a big part of the reason why President Biden is pushing these mandates, which are constitutional, at least by the 1905 decision of the Supreme Court in the case of smallpox immunization.
Dr. Byrer with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine names that we track every day for you. Pfizer up 2.5% right now. Its German partner BioNTech, its ADRs higher, a little changed, up less than 0.1%. AstraZeneca's ADRs down 0.2%. Moderna tumbling 1.1%. J&J, Johnson & Johnson down 0.7%. Recapping, the Dow lower, down 0.4. S&P higher by 0.1%. Bring on the song of the day. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. All right, bring it on. This is Bloomberg.
You know this, right? Are we convinced he knows it, Dave?
Yeah.
We are not convinced.
Okay, it's the Beatles.
Okay.
Drive my car.
All right. Now you've convinced us.
Okay. Yeah. I just wanted to let it go a little bit.
He did have a look of uncertainty on his face,
Yeah,
didn't
I
he?
think that's described as deer in the headlights.
Exactly. Which is why we kind of thought, well,
It
maybe
could happen. He might not
Hey,
know
but I
it.
pulled it off, okay?
Congratulations.
Your parents,
Redeemed myself.
what are your parents' names?
Tom and Susan.
Tom and Susan are very proud of you today.
Oh, thanks.
Yeah.
Okay.
They're probably listening.
Well, Tom and Susan, he got one. All right, Dave, so let's talk about the chart of the day.
All right. You want to drive a car? How about a Tesla?
Yes.
Let's start there. And, what's interesting is if you go through the consumer discretionary category, this real grab bag of all these companies that are sensitive to the economy's performance, you get two that really dominate. They're close to half of the value of the index. And one is Amazon.com and the other is Tesla. So I'm looking at Twitter yesterday, and I see this chart put together by someone I've never come across, Dan Gorghuber. at a firm that I'd never come across, Van On and Company. But
are these random charts you're pulling on, Dave?
No, not random at all.
I'm a little worried.
Is the ratio between Amazon and Tesla.
Sounds pretty cool.
Oh, it is. I mean, what captured my attention anyway is just how extreme the volatility in the ratio has been. You know, you go back 2.5 years or so, I mean, you were talking about a record. You know, you bring it forward to the last few weeks, it was down 94% from that record. I mean, it just goes to show you, Tesla's shares have really taken off over the last couple of years, where Amazon, not so much. Now, the chart highlights what's happened in the last few days. I mean, we know Tesla was down because of Elon Musk's planned and now completed share sales, and Amazon held up relatively well, but it's just a blip in the bigger picture going back to 2010 when Tesla went public. So, you know, this chart just kind of jumped out at me. I mean, you're talking about two companies that dominate this group and have very different stock performances over time. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So significant to the ratio, or to the index, correct, is the two of them together, but because they've been going in different directions, like it's just kind of good to note.
Well, it's an order of magnitude. I mean, not necessarily different directions, but if one moves up a whole lot faster than the other, consider Tesla this year, even with what we've seen this week, up about 51%. Amazon higher by less than 7%. So that means the ratio would go in Tesla's favor and against Amazon. So that's kind of how things have played out the last couple of years.
It is amazing that these two stocks have a combined 47% weight in the industry group.
Yeah.
That's an important thing to keep in mind when we talk about the industry groups.
Oh, absolutely, because, you know, there will be times when you have companies like this moving in one direction and all the rest of the companies moving in the other direction, and, you know, net, you get nothing out of it.
Or that combined, they're what, $2.7 trillion of market cap, those two companies. Obviously, Amazon more, but nonetheless, that just kind of blows my mind.
Oh, absolutely. And, you know, we could extend that discussion for a while and throw in Microsoft and Alphabet, Google's owner, and Apple and all the rest. But
what a big part of the market. But we're not going to do that because that means we wouldn't have time for your stock of the day.
You would not.
So let's do it.
All right. It's PaySafe. The ticker is PSFE. It's an online payment processor. Went public in March through a deal with one of these blank check companies, a SPAC. You know, and before the deal, I mean, the SPAC shares were taken off, but, you know, then it got completed and companies started operating. And it's been pretty much down ever since. And, you know, late yesterday, the company was out with third quarter results, came up short on revenue relative to analyst average estimate in the Bloomberg survey, and their fourth quarter forecast showed revenue and EBITDA, that earnings gauge, would also trail projections. And it's just not going the way that people might have hoped it would. And out of all of that, you've got PaySafe shares down 41%.
Gosh.
Lowest price since the company went public, and also the biggest decline.
Yeah, that's taking a big hit. Can I just also point out that Dave knows what a petabyte is?
Yeah, he does. That makes one of us.
Our Twitter followers are making fun of us because.
Hey, speaking of Twitter, check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave.
All right, let's get to World and National News. Nancy Lyons, take it away.
Thanks, Carol. President Biden spent part of his Veterans Day at Arlington National Cemetery, where he placed a wreath at the tomb of the unknown soldier and then thanked our troops.
To be a veteran is to have endured and survived challenges most Americans will never know. You've come through the trials and testing, brave dangers and deprivations, faced down tragic realities of war and death. And you've done it for us. You've done it for America.
President Biden is using the holiday to announce an effort to better understand, treat, and identify medical conditions suffered by troops who were exposed to burn pits and other toxic environments. Lawyers for ex-President Trump are making another attempt to block the release of documents from the Trump White House. The House committee investigating the January 6th Capitol attack is demanding hundreds of pages of documents, and President Biden is not standing in their way. Trump's legal team is asking a federal appeals court to temporarily halt the release that's scheduled for tomorrow. There's a 9th death now from the Astro World Music Festival in Houston. Attorney James Lassiter making the announcement today for the family.
At 6:50 last night, Bharti Shahani lost her battle from the horrific injuries that she sustained.
Texas Governor Greg Abbott is creating a task force on concert events. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So Tim and I wanted to bring you this story. It has to do with Alibaba Group Holdings. Singles Day Shopping Festival. It is underway. Forgive me, I was just reaching over for my notes. The reason I wanted to do is, I don't know if you remember, it's all about celebrating being single. Chinese holiday turned into an e-commerce event by Alibaba back in 2009.
Yeah, this was invented by Alibaba, and it makes
like
Prime
Valentine's Day, right?
It makes Prime Day look like
Makes
a
you go out and
sale at
shop
a
and
local
buy
corner
things.
store.
To show your love.
So big.
Yeah, it is though. It's massive.
Massive.
So should we talk some numbers?
Yeah, so the shopping festival, the Singles Day from Alibaba, posted a record sales of the equivalent of $84.5 billion, offering China's largest e-commerce firm a much-needed boost following a year of heightened regulatory scrutiny.
Yeah, sales at the end of November 11 surpassing the official tally for 2020. So this was pretty significant. Shares of Alibaba ADRs, by the way, are up 2.3% here in the United States, and other Chinese e-commerce. In fact, it's one of my gainers today, JD.com. We're seeing some different e-commerce in the Chinese sector certainly getting a boost today.
Well, since 2009, when Singles Day debuted, at least for Alibaba, it's come to dwarf the U.S. Black Friday and Cyber Monday sales, both intensity and in size. Alibaba has turned the event into one part showcase of commercialism, also one part publicity blitz. It features enormous discounts to encourage consumption, as well as headline-grabbing appearances by celebrities including Taylor Swift in some previous years.
Big deal, that's for sure. The 2020 edition, check this out, roughly doubled sales from the prior year as Alibaba added several days and additional services to the count. The festivities of this time around have been more low-key, with Alibaba seeking to turn the focus from sales growth to its efforts in sustainability and philanthropy, key pillars of President Xi's drive to achieve common prosperity. I did wonder how they would approach it, considering the pressure that these companies have been under because of the government.
Still some celebrity appearances, though.
Who's
Sherlock actor Benedict Cumberbatch.
I love him. He's a great actor.
Guess big in China.
I guess.
Yeah.
Anyway, we're definitely seeing it playing out in some of those Chinese ADRs here in the U.S.
Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
China's reported test of a nuclear-capable hypersonic weapon has raised alarms that the U.S. may be vulnerable to missile attacks. But while the U.S. should be vigilant about emerging threats, pouring more money into unproven missile defense technologies isn't the answer. In fact, expanding the American missile defense system could backfire. By making Russia and China less certain of the effectiveness of their arsenals, it could cause them to pursue more nuclear weapons, potentially setting off an arms race. This would drain resources and make the world more dangerous. Missile defense isn't a substitute for traditional deterrence and arms control, and it should not be allowed to jeopardize them. Maintaining a credible but limited missile defense capability, rather than spending huge sums on ambitious new systems, is the best way to protect U.S. interests and allies. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it. Just got about 10 minutes left in today's trading session. I feel like we've been bouncing around, but it has been a pretty tight range, safe to say, especially for the S&P 500, even the NASDAQ 100. The Dow, though, I know Tim and I were just talking, right? Disney really having an impact.
Yeah, Disney down by about 7% right now, pulling the Dow, the real underperformer of the day.
All right, so let's get to it. Let's bring in John Levito. He's co-chief investment officer of global fixed income at American Century Investments, $251 billion in assets under management. John with us on the phone from New York City. John, we're focusing on equities, but I think it's safe to say, and I think many would agree, that what's really been an interesting story has been the Treasury trade. Obviously closed today because of the Veterans Day holiday, but, you know, what a whipsaw from yields going down, treasuries going up, and then flip-flopping within a matter of about 12 hours on inflation concerns. How do you see, first of all, the treasury curve at this point and what it's telling us about the economic outlook and maybe where yields are going from here, especially at the shorter end?
Well, first off, good afternoon, and thank you for having me on. And you're absolutely right. It's been an interesting 24 to 48 hours in the bond market, and I think, you know, the whipping around and the volatility is just really a reflection of a lot of uncertainty about policy, about inflation, and about where rates are going to go forward. And I think you're also bringing in there a little bit element of, as we get a transition in monetary policy, right, which went from a ultra accommodative to something that's going to be less so going forward. The concerns about, you know, will there be a policy mistake going forward will naturally increase. So, you know, from our perspective is that, you know, we think, you know, interest rates, you know, whether it's short, medium, or long term, are going to be going up, you know, over the months ahead as the market comes to grips with the fact that inflation is going to be less transitory than originally expected. And we would think as that occurs, we would think that the curve probably generally will continue to flatten, although in the near term you could get some more steepening just because we've had quite a flattening environment over the last month or two.
So, John, how do you play this from an investment perspective? What should an allocation of fixed income be in a portfolio right now? I know that certainly depends on somebody's age and unique circumstances, but, you know, we do have a lot of people who come on our show and say there's no reason to have bonds in your portfolio right now.
Well, look, the fixed income is obviously a challenge right now, given even though rates have risen, it's still a very low interest rate environment. And on top of that, you have, it's been a good risk environment. So spread product like high yield and investment grade corporates have performed very well. So it is a little bit more challenging as we go into 2022. But I would also say take a step back and just say that, discipline is very, very important. And so having a broad asset allocation at all times is important. So, just to walk away from fixed income probably wouldn't be very prudent, just given the fact that, you just never know, right? You just want to have a balanced portfolio. But the way we're approaching the markets right now, is really one of a little bit of caution. So for our portfolios, we are we are short duration. So that means that, versus our benchmarks that we manage our various strategies, we have a duration or a maturity that is lower than what that is of our benchmark. So expecting rates to go up, be a little bit more defensive to protect the total return of the portfolio. And then on top of that, we have sort of a modest allocation to riskier assets like investment grade and high yield, recognizing that, yes, we need income for our clients, but also cautious about current valuation. So I would say, caution going into 2022 is prudent, but, fixed income, for the long run will always have a role in a client's portfolio.
When it comes to developed markets, John, at this point, you still like the United States over some other developed regions?
Well, it really depends. I mean, I think generally, if we're correct and interest rates continue to move higher over the next few months, I actually think the U.S. Will probably underperform other developed markets. So, low beta markets like Europe, core Europe, the Germanys of the world, as well as Japan, where growth there is while doing better is not quite as robust as the U.S. And inflation, while yes, it's picked up again, not quite as much as the U.S. We think those markets might, on average, on the balance, outperform the U.S. a little bit over the months ahead.
Hey, back to the idea of what the bond market again closed today, but has told us in recent days about when we think that the Fed will raise interest rates. What is it telling you?
Well, you can see what the market's pricing in. The market has really moved forward what they expect from the Fed. I think for some time the market was giving the Fed some benefit of the doubt and being patient with regard to sort of post-tapering when they would actually hike. But now, if you look what's priced in, they're pricing in 2 hikes for 2022. Starting in July, commencing right after tapering, and another one later in the year, and then probably another 3 hikes in 2023. So what basically the market is now saying is that the Fed has to take this inflationary environment more serious. Not that they weren't serious before, but in terms of addressing the fact that this transitory inflation may not be quite as temporary as expected, and that Fed hiking and less accommodation is right around the corner.
Is there an expectation by you or your team, John, that though growth will taper off somewhat from where we are right now because of all of the stimulus that's been out there, and as that starts to taper off, so too will economic growth, and maybe the Fed will not have to be as aggressive as maybe some are starting to price in because of the inflation concerns?
Well, I think from our view is that we think what's being priced in now by the market is probably fair. So I think the market generally has it right. And yes,
you're talking about the Treasury market, right? Correct? I'm assuming.
Yes.
The rates market.
The Treasury market. Yes. Yeah. The rates market, and if you look at the forwards, what's being priced in from a Fed policy standpoint. But yeah, we do expect. That said, we do expect the economy to taper off a little bit next year. But you keep in mind that this was a strong year of growth. Coming off of the pandemic, the second half of last year into this year, the reopening, we saw growth, accelerate. Here in the U.S., we're probably going to have about 5% for the year. So we'll come down somewhat, maybe 3.5%, 4% in 2022. But that's still solid growth. It's still above trend growth. So I'm not so sure that alone will mean that the Fed will need to do less than what is being priced in. It'll really come down to what happens with the inflation trajectory. Does it slow? And what happens on the employment side in terms of do we continue to have robust gains in employment, or does that come off as well? I think those will be the 2 key things to watch in 2022 with regard to Fed policy.
All right, going to leave it on that note. Hey, John, thank you so much. Really appreciate you weighing in, and really timely to have you, certainly on this week where we've seen those interesting Treasury market gyrations. John Levito, he's co-chief investment officer of global fixed income over at American Century Investments. They've got roughly $251 billion in assets under management. John joining us on the phone from New York City. All right, just about 3.5 minutes away from the closing bell. That 10-year note right now with a yield of 154, 2-year note yielding 0.51. And as for the equity markets, bouncing around, but in a bit of a tight range. Call it unchanged on the S&P 500, Dow off about 141, and the NASDAQ a gain of 81. All right, now, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and on YouTube. We're counting you down to the close on this Friday's Eve.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Shanali Bassick in for Taylor Riggs. Counting you down to the closing bell. Here to help take us Beyond the Bell. It's our global simulcast. Carol Massar and Tim Stenovic on a day here where the market is, I guess we could call it, relatively unchanged here. Volumes are light. The bond market is closed. But nevertheless, the aftermath of what we saw from the last 2 days still lingers.
Yeah, absolutely. And what's interesting today, I mean, the VIX really moved down a bunch. I think it was down a full point here. And we did see a rather tight range when it came to the moves in the S&P 500, about 1/3 of 1%. So overall, kind of investors, maybe, as you said, Romaine, taking a little bit of a breather, Tim. Definitely saw that out in the trade today.
Yeah, kind of a different story, though, on the Dow, down 0.4%. And that's all thanks to Disney. Disney down 7% and really dragging the entire index lower.
Yeah, interesting as to what they speak about the reopening trade. And of course, earnings are going to be coming for the next week. We're going to be eyeing up how retailers are performing, understanding how they're managing to pass on some of these costs. We've been thinking fast really about some of the supply chain woes that remain. And actually companies have so far managed to weather those margin storms.
Yeah, and I'm interested in a lot of the earnings we are going to get, which are going to be in the retail sector, the sector that probably is most directly affected by this. But the last earnings reports we had weren't awful.
They were just fine. And honestly, for retail, I also worry about how the real estate impact the retail sector as well. It's kind of complicated.
You know, we just talked to Lauren Hill a little while ago, not from the Fugees, but the other one, and she talked over at Westwood, and she basically said that you basically need to buy all your Christmas gifts now.
I haven't started shopping. Well, you know who has been shopping? Singles Day, Alibaba, talking about some really big numbers here. And we did see that play out in those Chinese e-commerce ADRs, Romaine.
All right, nice promo there for Alibaba. The Dow Jones Industrial Average looks like it's going to finish the day down about down around 36,000, below that mark, I should say. Down about 160 points or 0.4% here as we get the closing bells. S&P 500 up about 2 points or so here. Basically call it unchanged on the day, 46.49. That's the read right now as we wait for those numbers to settle. The NASDAQ Composite up 81 points or 0.5%. The outperformer on the day, that belongs to the Russell 2000, 2409, up about 0.8%.
All right, I'm going to stick with my theme here and looking at those Chinese e-commerce companies because the NASDAQ Golden Dragon China Index was up almost 5% today, or actually a little bit above 5% here. We did see Singles Day and Chinese e-commerce ADRs really getting a big bump in the trade. And we're also seeing maybe China pulling off a little bit when it comes to some of the regulatory oversight on its industries, guys.
Yeah, meanwhile, let's dig into some of these industry moves because it was a little changed on the day, as we know, on the S&P 500, but we did get outperformance from some of the chip makers, the semi-equipment makers as well, up some 2.4%. Materials catch a bit of a bid. Interesting that banks, after yesterday's pummeling from the yield spiking higher, we take a breather on the bond market and the banks managed to push up by about 0.6%. Food retail doing pretty well. On the downside is, of course, your consumer services index not doing so well. We're also seeing the likes of utilities on the downside. That's interesting that they're usually a little bit of a bond market play overall, but we have seen sort of an overall completely split picture, half in the red, and notably among them capital goods, media and entertainment. Interesting, Spotify doing a deal.
Hey, you know what, Caroline? 2 days of trading and there's no red on the screen when it comes to Rivian because that stock up 22% its second day of trading. That's after a 29% gain in yesterday's trading, going above that $100 billion market cap again, holding there today at the close. Pretty remarkable. Many calling it the next Tesla or questioning, is it the next Tesla? There are some differences, some great write-throughs on that on the Bloomberg, so I highly recommend it, but definitely a standout in today's trade. I mentioned e-commerce, Chinese e-commerce, because of Singles Day. Let me just bring your attention to one name, JD.com. That stock was up 8.3% in today's session, really akin to our Black Friday in the United States, but Singles Day can last pretty long. JD.com top in the NASDAQ 100. Alibaba, of course, also higher. And just want to mention a firm, we were breaking down their earnings after the closing. Bausch & Lomb really highlighting it yesterday in the trade. The buy now, pay later company rallying some 13, 14, almost 14% here, was up almost 25% at its highs. The company really cementing its relationship with Amazon as its only third-party, non-credit card, buy now, pay later option in the United States. So they are really cementing that relationship, and that's been a big bump to the upside for a firm, Tim, certainly on this Thursday.
Well, the decliners that I have are all earnings driven. Let's start with Disney. I talked a little earlier how it was dragging down the Dow. It also dragged down the S&P 500. It did finish the day lower by 7.1%. It's the biggest one-day drop since June of 2020. Shares of the company were down as much as 9.2% earlier in the day before recovering a little bit. This was all about a miss when it comes to streaming. Disney reporting the smallest quarterly gain for Disney Plus since its launch 2 years ago. Bob Chapek did say that Disney Plus will not return to that faster subscriber growth until the third or fourth quarter of the fiscal year. So that's about a year from now, guys.
When are they going to diversify their offerings, though? I mean, a lot of analysts...
From a content perspective?
Yeah, because they're basically saying Star Wars, Marvel, I mean, and obviously a lot of the animated stuff, but beyond that, you look at Netflix, I mean, anything you want on Netflix, no matter...
What they could do with Hulu.
Yeah, exactly.
Yeah, that's a really good point.
But that's actually where they had some gains, right, in terms of subscribers.
They did, and, you know, Tara LaChapelle at Bloomberg Opinion has argued this for a long time, that Disney kind of has this messaging problem because it has this, you know, quote-unquote adult content that appeals to adults on Hulu, but there's sort of a brand identity issue there because it has different brands throughout the world, and Disney's such a well-known brand, so when does it bring all this under one roof and really create that one Netflix-like product? That's the question. Also keeping an eye on shares of Beyond Meat, finishing the day down by 13%, the biggest one-day drop in a year. Beyond released disappointing sales projections for the fourth quarter that came in below estimates. It's the second time in the past month that guidance came in below estimates. Is it a fad?
No, it's not. This is something that really flew under the radar here. Caroline just said it, the cost of pea protein. You talk about the big drought that they had up there in Canada where a lot of these peas are sourced from. It's not something that we track a lot. No, I mean, who tracks pea protein costs? But that was a big issue here with Beyond Meat.
It was, but it was also sales projections were an issue too. So it wasn't just higher margins and supply chain, or margin pressure and supply chain issues. It was also a question of people actually going out and buying it, not just from grocery stores, but also from retail establishments.
Yeah. What about you got?
What about
on
love?
the screen? I thought you were married. What's that?
I am married, but for those who are looking right now, Bumble, well, they're not doing it as much as they were before. Bumble finishing the day down by more than 19%. Growth in paying subscribers didn't meet analyst estimates for the third quarter. You know, the company's CEO actually said the subscribers at its Europe-focused app, Badoo, actually fell as a result of COVID. I will say, though, the company raised its fourth quarter and full-year revenue forecast and beat analyst estimates for sales in the third quarter. Bumble said its paying subscribers are spending more on the app as well.
Whitney Wolf Herd, of course, one of the key female CEOs out there. There's been plenty that have been coming to the market, Rent the Runway and the like as well. Let's go cross-asset. Let's look at what's been happening in terms of your global macro movers. And it's been another day of dollar strength on the back of that inflation read. And in fact, maybe the Federal Reserve might move. The US dollar index has been pushing higher up by 0.3%. On the downside has been those commodity-related pairs. Canadian dollar off by 0.8%. The Kiwi as well, the New Zealand dollar off by 0.6%. And looking at commodities for you, we're seeing overall nat gas actually pushing higher. Remember, maybe the dollar is getting a bit of a bid because there are tensions over in Europe, Russia, Ukraine, certainly something that the United States is speaking to Europe about at the moment, the worries of some sort of ongoing tension between Russia and indeed some invasion in the Ukraine. Natural gas pushing higher. We've got on the downside was on the oil just a little bit as we have the push, the pull of whether the US will try to alleviate some of those supply concerns. And a mixed picture of the bond market. Of course, it was shut here in the United States, but we do have to sort of ongoing narrative about what the bond market was trying to tell equities and whether or not we had some calm on the equity market because the bond market was indeed shut here in the United States.
You always have milk on that screen.
I know, isn't it weird? I was laughing about this with Marissa, our producer, about I cannot get rid of milk no matter what happens.
I never have it's always on there. It's got to be important.
Well, maybe by the way, for the Kiwi, it affects the New Zealand dollar, but milk is up by 0.3% for our radio audience.
It's expensive.
Make of that what you will.
Well, it's a lot of households, right? Like you think about, we talk about food costs, and for the average American family, right, they're spending money.
If they've got kids, they are.
Milk that are basic, right?
What about oat milk?
And they should put peas on there. I just looked up. We do actually do. The Bloomberg terminal has everything, by the way. So yellow peas in Canada up 85% on a year-to-date basis, and most of those gains have actually come since the middle of the summer. That's what these companies are looking at right now. If you're making pea-based products.
Yeah, it's interesting. Matt Miller earlier today banned the word transitory on radio because nobody has defined exactly what it means. How long?
It's been banned on the show for a while.
Can he do that? Can he just unilaterally ban something on our radio?
You know,
I need to talk.
You know, at the Atlanta Fed, Raphael Bostic has a jar, and if you say transitory, you actually have to put $1 in it.
I wonder how much is in that jar.
Probably
a
a
lot by this
lot.
point.
We don't know. Transitory, could it be go on for many, many months as it already has at this point? I mean, economists we know are having a hard time really projecting when it comes to inflation. They keep missing the targets at this point, and they say it's difficult. How do you read the supply chain? How do you read where growth is going? How do you read, Caroline, everybody coming back to the workforce and kind of helping out with some of those dislocations in the market?
And indeed, the labor, whether or not labor and wages will continue to go up, what it means in terms of earnings and whether or not we're going to be able to pass on some of these margin pressures. To be perfectly frank, they have. This earnings season, margins have come in another record high. We have seen companies being able to weather this supply chain storm, these wages pushing ever higher. We're going to be speaking with key CEOs after the bell, of course, to talk about how they've managed to tackle some of these supply side concerns overall. We're going to be speaking with Rod Little over at Edgewell.
And even when you're talking about wages, we've seen some companies, Starbucks, others, $16, $17 wages. Barry Ritholtz telling us earlier that the $15 wage is de facto the new minimum in the United States.
You know how I know that the New York economy is back? They're actually building a new Starbucks down the street from us.
Thank God.
I know. I mean, because there's not one like 2 blocks away.
They're on every corner. They're on every corner, it feels
But
like.
that's a sign. That's a sign of the recovery.
Right.
Remember, they were shutting those things down.
Yeah, exactly.
It's coming back.
All right. It does. All right, we got to run, guys. All right, that's going to do it for our cross-platform coverage. That's a market wrap on this Friday's Eve. We'll see you again, same time, same place, tomorrow on radio, TV, and on YouTube.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Your meat really did get smacked down today.
Yeah, it did. Today was a bad day for the company. Hey, I'm also just thinking volume a little light today. You know, a lot of people off.
Well, yeah.
Kids out of school.
Treasury Trade, not happening.
Not happening.
People home.
Yeah.
Your wife's home.
We're here, though.
Just saying. We are. All right, let's get a check on world and national news. For that, over to Nancy Lyon. She's working hard, as always. She's in D.C. Hey, Nance.
Thanks, Carol. It has been a day of tributes for the nation's military veterans. Following a procession at Arlington National Cemetery, President Biden thanked all men and women who have served.
Our veterans represent the best of America. You are the very spine of America, not just the backbone. You're the spine of this country.
Biden says we all have a sacred obligation to honor and take care of veterans. Former President Donald Trump is issuing a Veterans Day message through the Canadian online platform Rumble. He took a swipe at President Biden for putting veterans, quote, through a lot. We've also just learned that an appeals court has temporarily blocked the archives from releasing January 6th White House records to lawmakers that are investigating the insurrection. Well, the spike in inflation, notably food and fuel, is having both economic and political impacts, but some believe it's just a short-term problem.
White House and Federal Reserve think prices will moderate next year. Daniel Alpert, founder of Westwood Capital, agrees.
This is still very much a transitory phenomenon. We've ramped up production in Asia to huge levels. Factories are running 2 and 3 shifts. Look at China. China is not going to be building housing anymore. They're going to return right back to the export sector.
Alpert said in a Bloomberg interview the result will likely be a reversal of current inflation at some point next year, as more people also run out of savings and look for jobs. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
You know, we love talking real estate.
We do.
We do. And we teed it up a little bit earlier with our bite of the day, but there's so much more when it comes to Manhattan real estate. Ashrat Carmiel, she covers it all for us here at Bloomberg News. She talks about Manhattan apartment rents surging by the most on record, workers committed to finding nicer digs in the city in anticipation of a return to the office.
Yeah, I think you missed the deal. Okay, if you were looking for a deal, because the median rent rose 18% in October from a year earlier, 3382. That's in Manhattan, I should note. That's according to Miller Samuel and Douglas Elliman Real Estate. That's in a report that came out today. This is the biggest annual increase in data going back a decade, though rents are still below the October 2019 median of 3409.
So it's interesting. So maybe it's cheaper than buying in suburbia right now still, but it's going up.
Yeah.
Is that kind of the story?
Exactly. That's exactly the story. They were shut out of suburban home buying because it was too expensive because of the demand over the last couple of years. That's according to Jonathan Miller, president of Miller Samuel. Others, though, are going back into the city to get, renting apartments close to the office, anticipating that they'll eventually have to go back.
Well, and here's a few more numbers to throw at you. The preference for higher-end apartments drove up rents across all categories last month, even as a number of new leases plummeted. Rents in buildings with doormen jumped 25% to a median $4,263. In non-doorman properties, which tend to be somewhat cheaper, the increase was just 7.4%. Studio costs climbed 17%. One bedrooms jumped 16%. Two bedroom rates were up 26%. Each set a new benchmark for annual growth, according to the team at Miller Samuel.
Hey, it's going to be interesting to look back and see what exactly the bottom was for real estate, not just from a rental perspective, but from a sales perspective as well, because you do have parts of New York City, particularly the outer boroughs right now, that are continuing to see record demand.
But they're coming back to the city.
Yeah, but I mean the outer boroughs, not...
Oh, yeah.
Like Brooklyn.
Right.
Queens.
Right.
There's a lot of demand in those areas.
And in the city, apparently.
Yeah, and in the city, too.
So I'm just saying, people are coming back.
They are. They're back.
Remember when everybody was like, oh, they're leaving the city, they'll never come back.
No, they're back.
Right. I mean, rents are going up. All right, you're listening to Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest quarterly numbers out of Lordstown Motors, and it reported a loss per share for the third quarter of 54 cents. Estimates for the loss were 59 cents. After hours, we are seeing shares of Lordstown, ticker RIDE, advanced now by 3.4%. Mixed day on Wall Street with the S&P up 2 points, little change, higher by about 0.1%. The Dow slumped 158, down 0.4%. Shares of the Walt Disney Company down 7%. Certainly weighing on the Dow today, we had Nasdaq up 81, higher by 0.5%. Equities did pare back a rebound after a sell-off yesterday due to fears of high inflation, spurring tighter monetary policy. Gains in materials and technology led the way for stocks today. No bond market trading because of the Veterans Day holiday. Gold up 0.7%, $18.62 the ounce, up $12.82 the ounce. West Texas Intermediate crude down 0.2%, $81.17 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So private planes, you know Tim, for the really cool people like the morning surveillance team, Matt Miller.
Wait, what about them?
They're probably tapping into private planes.
Oh, really? I didn't know that. They're not inviting me.
Apparently not.
Seats are limited, I guess.
You and I work commercial kind of people.
Yeah, we are.
All right.
For now.
Let's find out, though, right, because I do think the private aviation industry is amazing, and it's really been remarkable to see what has happened over the last couple of years. The publicly held private chartering company, Wheels Up, did report earnings yesterday. They did take a beating. We'll talk about that a little bit. The company posting a quarterly net loss of $59.5 million versus a profit of more than $20 million 1 year ago. They did get into, on the earnings call, supply chain constraints. So we'll get into that in just a moment. Let's bring in Kenny Dichter, CEO and founder of Wheels Up Experience, on the phone in Westchester. Kenny, good to have you here on Business Week. How are you?
Hey, good. We're proud of the quarter from a revenue perspective, up 55% to $300 million plus, and our active membership grew. But as you mentioned on the opening, supply chain constraints definitely making it more expensive for us to deliver for our membership and over-deliver for our membership. So short-term pain here, but I think in the long run, this has been just a super market for private aviation, and we see the demand really coming strong for an extended period of time.
You know, a friend of my husband and I, well known in the airline industry, and he and his wife both are, and they've talked about some of the shortages and constraints, whether it's pilots and workers coming back. That's some of what you guys experienced as well.
Yeah, I mean, you have this historic demand level that our industry is seeing in the private aviation side. I think the supply chain, third-party maintenance, when a plane goes down, AOG, it needs to be fixed. That return to service time is critical. It's a little bit slower than it's been historically. Pilots, as the commercial airlines are spooling back up, there's some movement around where, again, I think that the industry is kind of finding its footing as it relates to the cost. I think they're temporary and transitory in nature for the most part. I think from a Wheels Up perspective, we're now giving our pilots equity. We rang the bell at the New York Stock Exchange July 14th this year, so our pilots are all our partners now. So I think we have a really differentiated program to be able to attract the pilots and keep them, and again, they're partners in the business. I got to shout out the veterans. It's Veterans Day, and just thank you for your great service. We have a lot of veterans throughout our organization, and just a special day, and the freedoms that we all enjoy are because of what our veterans have done for us for the last 200 plus years.
Hey, Kenny, what can you tell us about demand and the way that demand has shifted during the pandemic? Because your business was around before the pandemic. You and I have spoken many times before. How did demand shift during the pandemic, and how do we know that demand will be long-lasting, that demand won't be transitory once the pandemic's over?
Yeah, well, going into the pandemic, our industry was ramping up. The convenience of flying privately, the idea that you can get from A to B to C in one night and still be home for dinner, all of that was in play. I think technology is the big unlock here. we partnered with a couple of former Amazon executives, Greg Greeley, who's our chairman of Marketplace, and Vinayak Hegde, who's now our president. Technology is the big unlock in this space. You think about what OpenTable did for restaurants and what Hotel Tonight did for real-time availability in the hotel space. Nobody has endeavored to become the Amazon or the Uber or the Airbnb of the private aviation space, and there's just so much latent capacity out there in the airframes, like Travis Kalanick and Garrett Camp, who figured out that the American car was parked 23 hours and 30 minutes a day. The average business jet's parked 23 hours and 40 minutes a day.
Wow.
Well, yeah, right. And think about, that's
just sitting there.
You're losing money just sitting there. What I'm wondering, though, I want to go back to, Kenny, if I may, the cost equation and the cost side of your business. Total costs and expenses were up 120% year over year, $370.55 million. We talked about, you guys are having to pay up to retain those pilots along with crew. Yep. Does that continue, or how long does that continue into next year?
Well, I would say the pricing, we have pricing power. Our industry has pricing power. We took, very gently, we took 8 to 13% on our entry level, the King Air and the light jet program. People will pay more. Now, we have a membership model. Think Amazon Prime, think Costco. And we want to make sure that our members feel like that membership has a lot of value. And I would say that the Wheels Up membership today, because of our availability and because of our willingness to take care of our members in this environment where prices are going up, we just want to be super gentle because we know how valuable these folks are, lifetime value. And again, if we took a short-term approach, or we were a sort of a charter broker or somebody that was doing this one-off, we couldn't take this long-term approach. But we really believe in the lifetime value of our membership, which is why we look at this as short-term. We're willing to do our part to absorb some of these costs that are showing up. But we know in the long term that if you look at the 11,000 plus members that we have that have a better than $80,000 a year spend with us, that we just want to make sure that we continue to hammer home that the value of the membership and taking care of the member. And again, like I said, there'll be plenty of time for us in the future to be much bigger and be super profitable as we sell our members not just private aviation time, but we sell them potentially yacht time, and we sell them villa time, and there's other adjacencies that we can, bring to the table,
right,
to enhance how people, work with us.
Right. We know you're doing partnerships and alliances with American Express to really kind of build out those services. Hey, come back soon. Kenny Dichter, founder, chairman, and CEO of Wheels Up, joining us on the phone from Westchester.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, find a comfy chair, pull over if you're driving, just settle in. Hope you get a little beverage of your choice. Non-alcoholic if you're driving. We've got a great guest coming up.
Yeah, somebody who's very familiar to our Bloomberg audience, Mark Mahaney, Senior Managing Director and Head of Internet Research at Evercore ISI. He's got a new book out. It's called Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. You know, he's the oldest and longest-lasting internet analyst on Wall Street.
He's seen a lot.
He's not old.
And he's still there. He's not that old. Not that old. Sorry, Mark. No, but anyway, you're going to want to take notes on this one. All right, first up, let's get to Charlie Pella, who's been taking notes about all the news after the close. Hey, Charlie.
Indeed. Well, hello there, and here's what's going on. Can't wait for this conversation coming up, by the way. We do have Lordstown Motor shares trading lower right now. They were higher initially about 15 minutes ago. Right now, Lordstown dropping by about 4%. It did report a loss per share for the third quarter of 54 cents. Estimates were for a loss of 59 cents. While we're talking about automakers, Tesla CEO Elon Musk unloaded $5 billion of stock in the EV maker shortly after restoking that social media debate over the weekend about the tax treatment of billionaire shareholders. Tesla tumbling today down by 0.4%. The Dow, the S&P, NASDAQ, it was a mixed Veterans Day session. We had the Dow dropping 158 points, down 0.4%. Walt Disney weighing on the Dow today after earnings. Disney shares tumbling 7.1%. S&P up 2 points, up by 0.1%. NASDAQ up 81, a gain there of 0.5%. The Dow, by the way, lower by 0.4%. Equities pared back a rebound after a sell-off in the previous session due to high fears high inflation could spur tighter monetary policy. Winnie Caesar is Global Head of Strategy at Credit Sites, and on Bloomberg Radio and Television this morning, she told us corporations will figure out the inflation challenge.
You should never underestimate corporate America's ability to adapt to new environments. We've seen that over the past 18 months with adapting to the pandemic. And now we're starting to see how corporate America is going to adapt to this new inflationary environment, be it supply chains, be it commodity prices and input costs or labor costs.
And today we've got gold up 0.7%, $18.62 the ounce. West Texas Intermediate crude down 0.2%, $81.21 a barrel. Briefly, Uber raising base fares in London by 10% to attract more drivers. There are reports that Uber's CEO is in London addressing drivers. Uber shares today down by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So let's get to our next guest, because we've certainly been looking forward to him. 20 years ago, we were in an environment where he was tracking the new world of the internet.
Yeah, well, it doesn't seem so new now.
No, it doesn't. And, you know, if you go back 20 years, flip phones were really popular through the 2000s. BlackBerry was out there. MySpace was launched in 2003, Facebook in 2004. I mean, that was kind of the stuff he was working around.
We're talking about Mark Mahaney, Senior Managing Director and Head of Internet Research at Evercore ISI, a familiar name to anyone who's listening right now. Mark, in the book, you talk about the hundreds of interviews that you've done, more than 1,000 when it comes to print. What made you want to write a book?
I had something I've actually been wanting to do for a couple of years, just kind of a personal journey, if you will. I've been looking at internet stocks and tech stocks for 25 years, and I wanted to try to put some kind of big-term, big-level thoughts, high-level thoughts I had down on paper. But there was two other things. One is that, we saw this surge in new investors come into the market in the last 2 years. I think it's something like 15 million accounts, a lot of through Robinhood, but other ways too. Other places too, and I thought that there needed to be kind of a book that would help them, introduce them to how to invest in tech, high growth stocks, sort of in the same way that Peter Lynch's One Up on Wall Street did a phenomenal job of that 40 years ago. I thought there was a need for something more up to date for newer investors. And then I guess the last thing, my last drive here was I saw too many institutional investors too, but also retail investors look to trade in what I thought were high-quality investable names. And so I was in a way trying to remind people there are hazards in investing and in trading, but you can get dramatic returns if you invest, with luck and with skill and with patience for the long term in high quality names. And that was probably the most important lesson that I learned from the last 25 years. Some of the fundamentals follow, stock prices follow fundamentals. You get the fundamentals right, and you can have a very good portfolio. So that was the last kind of real driver for me.
Well, it really is a great lesson book, playbook, if you will. And the title of the book, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. Mark Mahaney, so let's talk about some of those lessons because these are things that I feel like we talk about day in and day out at Bloomberg in terms of, do you focus on revenues? You talk about earnings growth, you talk about margins. Tell us some of the lessons.
Well, I'm going to start off with one warning and then one good piece of news. So the one warning is, again, these markets are always volatile, and even the best stocks, even the best franchises can underperform for periods of time. They will get dislocated. I think about these wonderful names that combine for this acronym called FANG, Facebook, Amazon, Netflix, and Google. You look at those stocks, they've each had 20 to 30, even as much as 40% corrections over the last 2, 5, and 10 years, despite being dramatic market outperformers. So kind of lesson number one, a warning to us all. We've had a pretty robust equity market for the last decade or so, so I just want to make sure we highlight the risks. But now let me highlight the reward. If there's one acronym, if there's one thing I want people to get from the book, it's the acronym DHQ. Now, not Dairy Queen, DQ, but DHQ, which stands for Dislocated High Quality Companies. If you're investing in the market, you want to do two things. You want to mitigate valuation risk, and you want to mitigate fundamentals risk. Valuation risk is, buying a stock whose multiple is too high. And fundamentals risk is buying a company and then watching it blow up or revenue growth sharply decelerate, margins collapse, et cetera. The way to hedge that second risk, that fundamentals risk, is to focus on high-quality names. So I spent a fair amount of time in the book looking at things like total addressable markets, management skill, especially successful product innovation, and really strong customer value props or propositions. You put that package together of those four things, that'll create a high-quality company. And what you want to do in hedging both of those risks, identify the high-quality companies and then wait for that dislocation, wait for them to trade off 20 or 30%, and then buy or add to positions. That's the single best piece of advice I had in the book.
Right. I love the idea about the volatility. I mean, I feel like we talk about that and we try to get our heads around whether it's a name like Tesla, which it's been on such a tear, but yet can go through a pretty significant correction. It sounds like, and just got about 25 seconds here, Mark, and then we'll come back. It sounds like, sometimes you just got to ride it out.
Yeah, you just need to be patient, long-term investor, and really focus on fundamentals. And I want to get that nail across that point. Stocks follow fundamentals. The bigger company gets in terms of revenue and cash flows, the higher the stock price. For long-term investors, the higher the stock price. That almost always is played out, even in the most volatile of sectors that you could look at, which is what I've done, consumer internet.
All right, sit tight, Mark. We're going to do a little bit of news, though. We're going to come back to you. Mark Mahaney is going to come back, Senior Managing Director, Head of Internet Research at the Independent Investment and Banking Advisory Firm. We're talking about Evercore ISI. His book out, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. We'll continue that conversation in just a moment.
But first, let's go to check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. A flyover the tomb of the unknown soldier is among the tributes today to the nation's military veterans. President Biden was on hand at Arlington National Cemetery to place a wreath at the tomb and to offer a message of appreciation.
Today, we pay homage to the unrelenting bravery and dedication that distinguish all those who have earned the title of American veteran.
Biden says there's nothing low risk or low cost about war for the women and men who fight it. Well, Biden's administration is establishing a new way to assess the health effects of those U.S. veterans who were exposed to burn pits during their service overseas. Those pits are used to burn waste, sometimes toxic waste. Federal officials plan to start by examining lung and breathing problems, but they say they will expand the effort as science identifies potential new connections. President Biden is expected to hold a virtual meeting with Chinese President Xi Jinping next week, and the former U.S. ambassador to China, Max Baucus, tells Bloomberg there is room for improvement in their relationship.
We have to deal with China. We may not like it. We may not like it as being more repressive. We may not like it as being more closed, but it's not going anywhere. We have to deal with it. And I think that when the more that President Biden can convey that message to President Xi, that is, we know you're there. We know we got to deal with you. Well, here are our issues. so that they're talking more like adults.
Max Baucus spoke with Bloomberg's David Weston today on Bloomberg's Balance of Power. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, thank you, Nance. We're going to get back to Mark Mahaney. He's with us from Evercore ISI. New book, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. Mark, just got about a minute and a half here, and then we'll come back and do some more. We got a question for you.
Yeah, Mark, you start out your book by writing that you're the oldest and longest-lasting internet analyst on Wall Street. What has kept you in the job for this amount of time? Because you certainly could have gone and worked a lot of places.
Well, I enjoy the work, and I'm lucky to be covering a sector that's extremely dynamic. If you were going to spend the last 25 years working on Wall Street, you would want to have either covered internet stocks, invested in internet stocks, maybe software. Those are the kind of the two areas that have been the most dynamic in terms of also new companies coming in. I mean, the internet created three of the largest cap companies in the world: Amazon, Facebook, and Google. And by the way, Microsoft and Apple, the reason that they are where they are is because they've created wonderful services, product, devices for accessing and utilizing the internet. So it's really been, I've been lucky to kind of stumble. It was a timing thing. I got lucky and stumbled into the internet. Not at the very beginning. I wasn't as smart as Al Gore, but I got in there, really kind of near the beginning of the commercial internet. And it's been just phenomenal and fascinating to watch these companies grow.
Got 30 seconds, and then we're going to do some more. But is the metaverse the next step of the internet in some way?
I don't know, but I absolutely think that you want to be long a name like Facebook because of its core business, but because it's also building what's likely option value. No, it is option value in terms of its investment in the metaverse. I like to see large platforms have these kind of long-term bets, like Google with autonomous vehicles and Waymo. This is Facebook's long-term bet, given the amount of money that they're putting into it and the resources. My guess is that there's a there, and investors are going to appreciate it 5 years down the road.
All right, Mark, hang on for a second. We're going to come back with you in just a moment. Mark Mahaney over at Evercore ISI. His new book, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. He's going to continue being our guest in just a moment.
He does have an outperform on Facebook at $430.
This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Mixed Thursday, the Dow lower, S&P, NASDAQ both higher. Today, equities pared back a rebound after a sell-off yesterday because of fears high inflation could spur tighter monetary policy. S&P today up less than 0.1%, led by gains in materials and technology. Yesterday, the S&P was down 0.8%, worst slump in more than a month. Today, we had the S&P up by 2 points. The Dow tumbling 158, down 0.4. NASDAQ up 81, up by 0.5%. Shares of the Walt Disney Company certainly weighing on the Dow today. Shares of Disney lower after earnings, down by 7.1%. No bond market trading today because of Veterans Day, the holiday. Gold up 0.7%, up $12.34 the ounce to $18.61. And West Texas Intermediate crude oil down 0.2%, $81.19 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. I want to get back to our guest. Still with us is Mark Mahaney, Senior Managing Director, Head of Internet Research over at Evercore ISI. He's got a new book out, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. He really is a top tech analyst. You might remember Institutional Investor, for his research, has included him among their top analysts for many, many years. Top 3 ranked analyst for, I think, 13 years and 5 years as a #1 ranked analyst. So this is why we care what he has to say. Mark's still with us on the phone. So, Mark, one thing I wanted to ask you, in your book, you talk about importance of management. You talk about, having a product. You talk about revenues over earnings. Like, how do we need to think about some of these companies that are starting out? We look at Rivian, that IPO. Is it a car company? Is it a tech company? It's not expected to be profitable for some time or really amp up production for some time. How do we need to look at these? How do you look at companies like that? I know it's not an internet company, but or pure.
No, that's right. So what I try to do, Carol, is I really try to focus on this framework. There's 3 or 4, 5 things I'm really looking for in a company. Now, there can be plenty of trading opportunities, but to really be kind of a good low core long-term investment, that takes something else. And by the way, even these great assets like Amazon today, I don't think that was a good core long-term investment until something like 2006, 2007, when they showed they could innovate in multiple areas, go from being an online book retailer to generating or building or really almost inventing the commercial cloud industry and then rolling out these Kindle products. You look for those kind of proof points. But if I check off the list, it's 1, look for companies that are facing large TAMs, total addressable markets. Secondly, you look for companies with just great management teams. I know that's an easy statement to say, so what does it really mean? You're looking for companies with great vision, like Reed Hastings in 1997, launching this company called Netflix, which kind of conjures up streaming over the internet, except you couldn't have streamed anything over the internet. At least it would have taken you hours to download the first 5 minutes of Terminator back then. But he had the vision to know that 10 years from then, the business would go streaming. People would stream video over the internet. So you look for that kind of industry, that vision from CEOs. You look for companies, third, that can be successful with product innovation. There's a saying in finance that past performance is no indicator of future performance. I don't think that's true when it comes to management and product innovation. Companies that show you a track record of being able to do 2 or 3 really good product innovations, you stick with them. And finally, you focus on companies that have got compelling value propositions. Companies that put customers ahead of investors. And there's 2 examples I write about in detail in the book. I'll just click on them here. One is Grubhub versus DoorDash, and the other is Amazon versus eBay. In both of those cases, the company with the inferior business model but the superior customer value proposition, in the case of Amazon, price, selection, and convenience for consumers, that company won. So you look for these companies that are investing for the long term to satisfy customers, even if that means disappointing Wall Street near term. They can be better long-term winners.
Hey, Mark, you mentioned in your book, too, that you've gotten to know a lot of the executives at these companies over the last 25 years, some better than others. Which single person is the most transformative when it comes to building and leading a business?
Well, it's kind of hard to argue with Jeff Bezos. Just he is the entrepreneur of that generation. I'd say from 2000 to 2020, the singularly most impressive entrepreneur now. Elon Musk may well be the one of this next generation, but for somebody to succeed in such different industries, and we're talking about online retail, we're talking about now online advertising, we're talking about cloud computing. I mean, those are industries with dramatically different competencies. And so the ability of that person, the founder, and it's the management team, and of course it's the employee base, but to succeed in those in businesses as different and diverse as that's truly impressive. So it's kind of hard not to pick Bezos for that.
No, I think a lot of people would agree with you. So then what do we do, Mark? So we know he's still chairman of his company, but Andy Jassy's now in charge as chief executive officer. So do we get a little nervous that Amazon will not be the visionary company that it's been because Jeff Bezos is stepping back?
It's a good question, Carol. I think we absolutely should be at the margin a little nervous. Andy Jassy, we're going to judge him over the next 5 years. The advantage that Amazon shareholders have is that Jassy really worked at Bezos' side for, I think it was 18 or 19 years. Mm-hmm. I've met Andy along the way as he was building up AWS. By the way, the fact that he helped develop, deliver, build AWS, which is now probably half the value of Amazon. The fact that he did that, I mean, he's essentially run a company in the past. So I think his organizational chops, his operational chops are really well known. Whether he has the ability that Bezos had, which so few entrepreneurs really have, Jobs, a Musk, to really look around corners and figure out new industries, not new products, but I'm talking about new industries. Yeah. I don't know whether Jassy has that or not. I don't think it matters to Amazon shareholders in the next 2 to 5 years. It would matter beyond that. So I think the jury's going to be out for a while on Jassy.
All right, we have to ask you Zillow because, man, this has been an interesting story to watch. I know you cover it. I believe you downgraded it from, I think, outperform to inline after the company said it's exiting. Basically, it's house flipping business. How do you still like it, though?
No, I downgraded it. And in fact,
but you didn't put a sell rating on it.
No, you're right. I did not, Carol. You're right. I think there is an interesting core business there. When you publish something, and all of a sudden once it's out there, it's all there. You can't retract it. Well, in that book, I talked about the Zillow pivot. And I talked as an example of a company that I thought was a founder-led company. When they went into the iBuying market, the only reason they did that, were able to do that, is that they had the founder come back and say, we have to do this, even though it was going to be punished near term by Wall Street for taking on excess risk. And I really thought that they had a shot at the iBuying market. It's rare I've seen a company sort of, implode is too strong of a word, but misexecute on a new business initiative in the way that Zillow has in the last 6 months. I'm not throwing shade at them. I mean, they deserve criticism. I'll criticize myself, too. I had to buy in the stock, so I made a mistake there, too. I still think that the core business is attractive. I think that stock's going to be in the woodshed for 6 months, maybe 12 months. I think out of that, there will be an interesting business. But that's a case of a company that, like what was so impressive about Bezos is that he went into multiple different industries and succeeded. So Zillow tried to do the same thing, and they didn't succeed in the second one. They're still okay in that first one. It was overstretch and misexecution. It's unfortunate, and I got that call wrong, but it was a fascinating example of the pitfalls of tech investing.
Mark Mahaney, you have an open invitation anytime you want to come back to talk more about your book and just your philosophy and thoughts about your space, because this has been so much fun. Mark Mahaney over at Evercore ISI. His book is Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts.
We got Joe Matthew, a special treat in the house in New York City
you guys
today.
in the flesh.
In the flesh.
What
Joe,
a great honor.
What's coming up on
I
Sound
know
On?
I've made it. We're actually going to start this Veterans Day with Jake Auchincloss, the Marine combat veteran turned congressman who's trying to get some bills passed to help veterans. That's where we're going to start. We'll get to Mark Zandi as well and whether this inflation is about to get worse.
Good stuff. This is Bloomberg.